following is a project of our nonprofit newsroom. Support Midcoast Morning and local community-centered journalism today by signing up to be a monthly sustaining donor at chly.ca/donate. It doesn't take much money to support local news.
Hello and welcome to Midcoast Morning. I'm Joe Pugh. Socially responsible investing was the subject of a lively debate around the council table in Nanaimo on Monday. A motion from Councillor Ben Gesselbracht narrowly passed with a 5-4 vote. It called for a staff report with options to update the city's investment policy to include a percentage of the city's portfolio in socially responsible and low greenhouse gas emissions investments. The issue was debated by the previous council in 2021, who came to a decision to pursue socially responsible and green investments when they were within 5% of maximum available yields. Nanaimo has around $200 million in reserves. Funds aren't directly invested in, say, fossil fuel companies, and municipalities have to follow different rules around investing than individuals. Today on the program, we'll break down Council's debate on the subject with the CEO of BC's Municipal Finance Authority. But first, I spoke with Councillor Ben Gesselbracht, who brought this issue to the table. Well, what are maybe the very specific things you would want the city's investment policy to not do, to not invest in?
I think that, for me specifically, I think that we need to not be investing in companies that have a track record. And this is what's very difficult, is because the financial instruments that are the safest are ones where it's not clear where that money is going. You take out a 3-year GIC from the Royal Bank, for example. You're basically just getting revenue off of that money, then goes in Royal Bank and they lend it out to who knows where. And it could be going to very positive things, or it could be going to, a gold mine. And, I gave an example in Tanzania that has, the company's got a track record for trampling over the rights of the indigenous people of that area. You don't know, and you don't have any control. It's just based on whether the bank of Royal Bank or whatever bank is creating a positive return from their investments. And if they're making their decisions based on what's the biggest bang for my buck within that 3-year window, is going to that ideology of this is the quickest bang for my buck. And I think that what we're asking for is a perspective of just being more aware of where our investments are going. And so asking for, when we put money into a financial instrument, knowing where that money is being loaned out to or what it's being invested in, so that we can decide what we want in there. And obviously, one way is just offloading all the responsibility to a bank, and one is taking a bit more responsibility on ourselves, or at least having the ability to distinguish it. So I think what I would like to see us investing in industries that are trying to reduce greenhouse gas emissions as number one. I think that is a huge social task that it takes all hands on deck and all tools to accomplish, but that I see, very negative consequences because of the pace, our inability to address the situation where we're seeing increased extremes of climate and the costs around, insurance claims, having to retrofit all our infrastructure, and then sort of on the social instability that it does because of disrupting food production and migratory patterns. It's a mess. So that would be one example. Another example would be just basically investing in companies that are investing in Canada and more locally. How can we build up our more local economy stronger and put our money into building that, as opposed to sort of like companies that are operating more offshore and who are operating jurisdictions with different labor practices that we don't really have any say about. I think that would be another area.
I want to bring this back to what has happened at this week's council meeting. So a motion basically to update a 3-year-old staff report with new numbers. It passed very narrowly, 5-4. A number of the councillors opposed expressed the idea that they felt that this was basically a waste of staff's time to even do the report, let alone make a decision on this. What, I guess, do you see? What is your hope or your assessment of how this unfolds going forward?
Yeah, I mean, I've been on this council enough and with the cast of characters, and it's always the same thing. Like if there's looking to change the status quo, it always comes back to, no, we can't do this because of staff time or because of this or that or this. And like, there's so many excuses of why not to do something that has got a good intention into it. And I think societally, there's a bit of a backlash because like people are feeling a pinch in terms of affordability, and this, and so there's probably even a bit more resistance to engage in these things. But ultimately, it's based on a very sound rationale, and I think you just have to take the perspective of you can do what you can, and we may only do 10. My hope is that we do 10%. If we can get 10%, I'll feel like that is at least moving in the right direction. And it would have been worth having to go through the whole kerfuffle last night. Like, I hate having those type of debates and get into it. It's just like, it's the same old thing. I feel like I'm like arguing with my dad. But if we can, move the dial a little bit, that's great. And really, it will probably have zero financial impact on the city. The degree that interest rates move anyhow, like you're going to take a loss or a gain at any point, and you actually shouldn't really be budgeting your tax increases or decreases on your investment returns. It's probably poor financial risk management in the sense, like it's like we don't base our annual budget on something that is not a sure bet. And if we get some returns, that's great. And if we just really want to keep up with inflation. So that would be my hope. But I really would like just council to see the numbers. And I think it's an opportunity to bring in some outside folks that are more literate and aware about socially responsible investing and about the different financial instruments out there and what the possible benefits is, so that everybody can learn. And I think that our organization can increase its awareness and understanding in this realm. And this is a good opportunity to do that. And I do genuinely want to avoid sort of like the debates that occurred last night, because it's like we're really asking for just more information and looking at it. But sometimes emotions can get high and triggered from years sitting at the table together. But I think, there's valid points on all sides. And I think it's important not to dramatize that, but just look at the reality. And I think at a basic level, we should know where our money is going into.
Nanaimo City Councillor Ben Gesselbracht speaking about a motion he brought forward related to socially responsible investing at this week's council meeting.
Midcoast Morning is made possible by the Community Radio Fund of Canada's Radio Meters program and listeners like you. Support Midcoast Morning and CHLY's nonprofit newsroom today by becoming a sustaining donor at chly.ca/donate. Local news can't survive without your support. Another way to help us out is to share this show with your friends and tell them why they should support us. Finally, if you're listening to the podcast edition of Midcoast Morning, go and give us a positive review on Apple Podcasts or whatever podcast feed you use. It helps people find us.
We're breaking down the debate over socially responsible investing that took place around the council table in Nanaimo this week. In a 5-4 vote, council passed a motion asking staff to prepare a report to provide options for updating the city's investment portfolio to include a percentage of socially responsible and low greenhouse gas emission investments. The Municipal Finance Authority of BC, or MFA, handles loans to local governments in the province and also offers them some investment options. CEO Peter Urbanc watched council's debate on this issue.
Hi, my name's Peter Urbanc. I'm the CEO of a small organization called the Municipal Finance Authority of British Columbia. And I've been here for about 8 years. And previously, my background was a treasurer of a province in the East Coast. And I was also an investment banker for many years prior to moving to BC 8 years ago.
So a shorthand way to think of it might be that the MFA is an organization that allows local governments to borrow money and also make some investments, borrow money at lower rates and hopefully get better returns on investments than certain other financial institutions.
That's exactly right. And I didn't mention when you borrow long-term in British Columbia, you don't have a choice. You must use the MFA to borrow. But when you invest your local government reserves, you have options. You don't have to use the MFA. You can use the MFA together with other external service providers of investment products, or you can just invest them completely on your own. So you have options, and we offer you those options. We believe ours are best in class, but you always have the option to not use the MFA for your investment services.
What did you take away from watching that debate?
I'd say that debate is very typical of debates taking place, not just across Canada, but in most other jurisdictions around the world. When whether it's a local government or provincial government, other layer of government, they have significant investment portfolios. In the case of local governments in BC, they have there's almost $20 billion of reserves that are managed throughout the province by councillors, and so you'd imagine that. In typical good corporate or government fashion, if you have big corporate priorities, for example, if climate change is a priority for you as a municipality and you've declared a climate emergency, you would naturally want to align your long-term vision and goals with the investment process. So this is not atypical of a discussion that has taken place for many years and will continue to take place over the coming decades. The interesting thing that I always see when these types of discussions happen, i.e., let's look at our investment portfolio and let's invest in a more socially or environmentally positive way, you often see people completely talking past each other. And that's really not a fault of the councillors. I'd say it's a fault of the press, bankers, investment advisors, but also politicians and citizens all taking a very strong view on how possible and how good it is to use your investment dollars to create good. And so you have these broad, strange definitions that are out there, and many of them are unstandardized. And then you have people just making statements that, investing with a purpose or with climate in view, you'll not only will you be doing good things, you'll be making better returns. Or on the other side, you'll have people saying, well, investing is all about earning the best return you can. There is no way you can incorporate all of these other objectives and make the life of a CFO and the finance staff so complicated. It's a waste of time and effort. So you've got really two opposing views, and then everyone in the middle, and everybody is banding about comments and words and making statements that really we shouldn't be making because we don't know the answers to many of these questions. It's getting better. The area, we have more and more standardization in the socially responsible space. But that's my main comment, is that you have people talking past each other oftentimes, and no different than what we saw in Nanaimo. You see it everywhere across Canada.
I want to maybe run by a few specific things that happened in the meeting. I'll just start with this clip from Nanaimo Mayor Leonard Krogh.
Ms. Mercer, a few questions for you. We did invest in the socially responsible MFA fund, one of them, didn't we?
Yes, we did.
And what was our financial experience in that, if I may ask?
We invested $2 million in 2021, and we sold it in 2023 at a loss of $33,000.
So we lost money in following a focus on social responsibility with the citizens' money.
What kind of context do you think? So you are CEO of the MFA. They were talking about an MFA investment there. What kind of context do you think it is important that the listeners know about that exchange?
Well, there's a lot to unravel there. So first, let me just point out that the MFA is agnostic. We want to support our member clients, local governments throughout BC, to do the best possible job they can in investing their investment dollars. But we are not about to tell local governments how they should invest and what The objectives should be around their investment policies, whether they should or should not be targeting social objectives or investing in one way versus another. So what we've done is create a whole suite of products. We have about 10 different investment products today that we manage, and some of those are fossil fuel free. So we've come up with a definition as to what fossil fuel free means. So therein, I'll just start unraveling one complexity. What does fossil fuel free mean? So it means a lot of different things to different people. In the context of the fund that the mayor is speaking to here, it was a Canadian short-term bond fund. So it would invest in dozens and dozens of bonds, government bonds, local government bonds, provincial government of Canada bonds, companies that issue bonds in Canada. So this fund would invest in those bonds, but would have a rule that would say that it would not invest in any companies that are involved in the direct extraction, distribution, or primary manufacturing of oil, coal, and natural gas, so petrochemical type businesses. So this definition is not really a standard definition. We think it's the most commonly used definition around the world. But for example, it would not invest in a Canadian oil and gas company. It would not allow us to invest in a Canadian oil and gas company. It would not allow us to invest in a pipeline. And so it will invest in all the bonds out there in Canada, except for those that meet that definition. So that's the first thing. Now, the problem is, you may remember that so it is in fact true. So Nanaimo did purchase in late 2021, $2 million of this bond fund, and they sold it for about a loss of $33,000 or so. So roughly a 0.9% loss on that investment. When they sold it in September 2023, they would have held it for less than 2 years. So the first point I'd like to make is that we are very careful in telling our clients, and I don't know exactly why Nanaimo sold that investment, but you don't only lose money when you sell an investment. So for example, if Nanaimo had held on to that investment till today, that investment would actually have earned money. So they would have been ahead by about $70,000, I think. And the reason is, during the period that they purchased in November 2021 to September 2023, interest rates went up from 0.25% to 5% very quickly. We're all aware of this. The government of Canada raised rates very quickly because we had an inflationary problem in Canada. And so when you own bonds that are 2, 3, 4, 5 years in maturity, when interest rates go up and you hold a bunch of bonds at a fixed interest rate, you will lose money on those bonds. So the real comparison to make about this socially responsible investment would be between a short-term bond fund that excluded fossil fuel-free companies like the one we offered, and one that doesn't. And the reality is that that's an apples to apples comparison. What the mayor, I think, is comparing is the investment in this fund to investments, just deposits in a bank. But deposits in a bank in a rising rate environment, there would be no impact to the value of that deposit because they are overnight deposits. You can just take them out. You put in $1, you take out $1. We offer products, by the way, we offer 3 deposit products and a money market product that would not have lost any money over that period of time. So there is an example where we're comparing a socially responsible fund to another set of investments that you may or may not consider to be socially responsible, but they're not apple to apples comparison. You're comparing a bond fund that has interest rate risk that got impacted by rising interest rates to overnight deposits. I should point out that fund, when compared to its proper benchmark, outperformed the short-term benchmark that underlies that fund by about 1%. So in fact, that fund outperformed the strategy of buying every single bond in the index for that period of time. But I just want to caveat this by saying I hate making comparisons between things that are considered to be socially responsible versus investments that maybe are not considered to be socially responsible, because to be able to say that you're going to outperform or do better or worse, it is impossible to know when you're buying the investment what's going to happen in the future. What will happen to oil and gas companies? We've had the last few years, oil and gas and companies have earned a lot of money. So if you bought equities in oil and gas companies, you would have made much more money than the market would have, versus maybe the previous 5 years where oil and gas companies were dropping in price. So I'm very remiss to make comparisons between a socially responsible and a non-socially responsible fund. You can't really do that. But in this case, you're comparing apples to oranges when you make that comment about a loss having happened in the socially responsible fund.
I also wanted to run by this clip from Councillor Ben Gesselbracht, who is the councillor who brought forward this motion in the first place, about maybe some of the concerns that prompted it.
We've got over $200 million of funds that we've invested, and we don't know exactly what we're investing in. It's just sort of, a GIC from a bank, and that bank could be investing, for example, one does in Barrick Gold, and Barrick Gold, moved, a large number of Indigenous people off their lands in a very bad way to expand a gold mine in Tanzania. But we'd never know that because it's just a GIC from X bank. Is
the sort of issue that the councillor is identifying there, I guess, how would you evaluate that concern?
Well, I think it's a valid concern, but it's a very difficult concern to deal with. So, for example, when you do deposit money with a bank or a credit union or any financial institution, you have no control as to what that bank or that financial institution is going to do with that money. They may lend it to a homeowner to buy a house, or they may lend it to an oil and gas company or a pipeline company to lay a pipeline or open up a new extraction facility. You have no control over that. So that's the first point. But that is true of any investment. When you put money in any, not an MFA product, but any financial product that will buy bonds or stocks or any type of mutual fund or ETF, you really don't know where that money is going to go. But moreover, you have to look at the second and third order impacts of these things. So you may be able to buy, say, a socially responsible fund that says we're not going to give money to this type of company. But that may not giving money to the company means you're not at the table with the company, and maybe your asset manager can't help change that company and change its operations for the better in the future. So that's one point. It is an issue. It's a fair issue, but the problem is it would be impossible. I would submit, or would make no sense to ask staff at the city of Nanaimo to start evaluating each and every bank they invest in. Try to ask the bank, I'd like to know every single loan you make with this money. Where does the money go towards? And is that entity, are they subcontracting with a manufacturer in Asia that's employing child labor? I mean, there's so many issues. Once you give an entity money, how far do you want to follow the money? The other thing is that's interesting because it raises an interesting point to me. We often want to exclude money from going to certain entities, or we want to make certain decisions that we think are for the better. But oftentimes, if you look at second or third order impacts, you end up doing worse things for the environment. So just one very quick example, we've seen more and more entities giving less capital to oil and gas companies. And oil and gas companies need to report, public oil and gas companies need to report their GHG emissions for their operations. In fact, this is going to become, all companies are going to have to do that over the next few years. This is regulation at the federal level, at regulatory levels, et cetera. Well, the fact of the matter is oil and gas companies that are public have been selling their dirtiest assets, the ones that are not the most efficient and that maybe in the extraction of oil and gas have a heavier GHG footprint than another company. So they sell those assets and then they don't go to another public company. They go to private equity or private investors or countries, say like Venezuela or Saudi Arabia, that will buy these assets. And now we have zero control over the assets because the public companies that used to report on all of those assets now no longer own them. They go to another player that has no reporting requirements, and they will, I guarantee you, extract those oil and gas assets even more quickly than the oil and gas company may have. And they'll also spend less money to try to, make the operations more green because they are pure financial players. They're only looking at it as a return. So there's just one example where you can try to be doing the right thing through investing, but it's extremely difficult to build a mousetrap. There's second and third order impacts to these dollars, and it's very hard to track them. So my general recommendation for local governments is, yes, you can do certain things. For example, if you really care about not investing in oil and gas companies, you can buy MFA funds that have that definition attached to them. Or if you'd like, you can wait for more and more reporting by banks and try to buy the banks that lend less to the oil patch, but you can't do that today. They're not going to give you that information yet. There's all sorts of things you could do, but at some point you have to make a decision around, there's a lot of complexity involved. You're asking finance staff to be making social environmental decisions. And by the way, it's not just climate, right? A lot of the councillors mentioned all sorts of things. Alcohol, production of alcohol, the sin investments like, gambling and companies that, may produce pornography. There's all sorts of bad things along the ESG spectrum out there. The problem is, does finance staff and even council, can they agree on what it is they're trying to target? And then are targeting it through financial products, is that the most efficient way to do it? Or does that add just too much complexity?
Peter Urbanc is CEO of the Municipal Finance Authority of BC. We're going to keep the conversation going on this on a future program. That's our show for the day. Thank you for joining me. I'm Joe Pugh, host and producer of Midcoast Morning. Jesse Woodward is our executive producer, and Arby Frew is our technical advisor. You can sign up for CHLY's newsletter at chly.ca/subscribe for updates from our nonprofit newsroom. Our theme song is First One by local Nanaimo band Waste Management. If you have a story you'd like us to cover, email us at news@chly.ca. If you have a story you'd like us to cover, email us at news@chly.ca. That's all for now. I'll talk to you on another Midcoast Morning.
Midcoast Morning would not be possible without the funding of the Community Radio Fund of Canada's Radio Meters program and listeners like you. Midcoast Morning is a project of CHLY's nonprofit newsroom. Support nonprofit journalism in Nanaimo and on the Salish Sea today by becoming a monthly sustaining donor at $5 or more per month. Support the program at chly.ca/donate. If you're already a supporter, record a voice memo telling others where you're listening from and why they too should support our work. After you're done, you can email it to us. Also, share the podcast with your friends. While Meta is blocking Canadian users from sharing news content on their Facebook feeds, you can still share our podcast directly with your friends via Facebook or Instagram Messenger. Finally, this program acknowledges and gives thanks to the Nanaimo First Nation as we broadcast and podcast from their traditional territory. Thanks for listening.